Welcome to Cat Eye US Stock. We watch markets with calm focus and sharp instincts. It's Monday, June 1st, 2026, and Nvidia just lit the AI fuse, but rising oil and collapsing consumer tech turned today into a brutal bifurcated tape. The vibe? Tense, but still optimistic. Indexes held up, even pushed higher, but it didn't feel like a clean everything rally. So what happened? The market paid up again for AI winners, while the rest of the board just quietly bled. Looking at the S&P 500 heatmap, it was a tale of two markets. Roughly 60% of the board was red. But the green that mattered? Concentrated in massive weight leaders. Enterprise software and AI infrastructure were absolutely glowing. Meanwhile, a massive pocket of consumer-facing megacap tech, ad platforms, and commerce. Heavy red. So sure, the index looked fine, but the heatmap told a different story. Participation is thinning. And that heatmap separation? That's the rotation in one picture. Capital flow was unapologetically selective today. Money crowded right into AI compute and enterprise software, the classic picks and shovels trade. Energy also stood out on oil-linked strength. But on the flip side, consumer tech and internet names got hit hard, even the usual ballast. Staples, healthcare, utilities, broadly red. Throw in fading small caps, and you get a risk on tape. But it's tight, it's crowded, and it is heavily momentum-driven. Now, here's what today did not resolve. We're still stuck in a tug-of-war, a fresh AI impulse on one side and a macro headwind from oil and geopolitics on the other. That oil strength? It acted like a tax on broad participation, and the cleanest truth came straight from semis. This was not a rising tide day. It was pure dispersion. Some names screamed higher, others just cratered. So the setup is simple. If the AI generals keep marching, indexes look calm. But if they even pause, weak breath is going to show up fast. Quick note on the tape. Traders were swapping some major options chatter today. Unverified whale talk was circulating about a massive Dell call options trade, reported as 1,000 contracts of $500 September calls. Now, that's not confirmed. Treat it as chatter, not fact. But it totally fit the psychology of the day. Aggressive upside positioning in AI hardware, even while the broader market stayed completely split. Nvidia was the session's main general. The stock jumped over 6.25%. The driver? An AI catalyst tied to its latest chip, an AI PC push, which pulled the entire AI infrastructure complex right up with it. And that really mattered at the index level. Today was one of those sessions where Nvidia's strength was the literal difference between a flat-to-down tape and another record-leaning close. But Oracle was a huge proof point that this wasn't just an Nvidia story. The stock absolutely ripped, up nearly 10% as the market leaned hard into enterprise software and the AI stack. Investors are heavily pricing in momentum around OCI and AI demand. Look, when you see a near double-digit move in a megacap software name, it's telling you exactly where the crowd is hiding. Meanwhile, Dell became a high beta proxy for the AI capex cycle. The stock surged almost 11%. It's riding that AI hardware halo effect around Nvidia and massive enthusiasm for the AI server cycle. Analysts were cheering it on all session. A double-digit move like that? It's the market screaming that traders are still chasing infrastructure winners, but it also means Dell can swing hard the other way if that momentum cools. Now for the flip side inside semis. Qualcomm. The stock dropped nearly 9%. Why? Fears of tougher PC competition, right after Nvidia's AI PC chip announcement, completely shifted the narrative against legacy PC and mobile silicon. And here's the key message from today's tape. The market wasn't just paying for generic semi exposure. It was paying up for the perceived AI winners, and ruthlessly punishing the rest. Meta was one of the biggest drags in the consumer tech bucket today. The stock fell over 5%. And the crazy part? There wasn't a single company-specific headline driving it. It was just pure, sector-level selling pressure across ad and consumer internet platforms. And this mattered because it reinforced the day's total contradiction. The Nasdaq was green, but big, household platforms were still getting offered down. ExxonMobil was a very clean rotation tell today. The stock gained nearly 3% as oil strength, tied straight to geopolitical tension, lifted the energy majors. But notice the contrast here. Energy was green, while classic defensives like staples, healthcare, and utilities were weak. So, that's not your textbook fear bid. That's pure rotation. It's just money, actively picking its spots. Zebra. Looking ahead, there are 3 practical things to watch. First, oil and geopolitics. Oil strength was a massive cross-asset driver today. Second, earnings attention stays pinned to AI enterprise tech. We're watching Broadcom and CrowdStrike this week. And third, the macro calendar for next week. CPI hits Wednesday, June 10th, 2026, followed by PPI and jobless claims on Thursday the 11th. We aren't making predictions here. These are just the scheduled catalysts that could either widen or severely tighten this narrow leadership trade. Let's wrap this up on the surface. Calm. The S&P 500 finished up 0.3%, closing right around 7,600. The Nasdaq added 0.4%, but the Russell 2000 fell 0.5%. Today's entire character was about concentration. If Nvidia and the AI leaders keep working, the indices stay pinned. If they stall out, today's weak participation becomes the main story, incredibly fast. Check back after the next session. We'll see if breadth improves, or if this split gets even sharper. Thank you for watching Cat Eye US Stock. Stay curious, stay calm, and we'll see you next time.